Damani's signature show, Wizards of the Lal Street, is back. The focus of this series is to feature some of the finest young investors who are likely to make a mark in investments in the years to come. Ramesh Damani caught up with Kuntal Shah, the partner at Sageone, and began by asking him if he followed the all-in strategy in his early days and the top stock ideas that kicked off his career in the markets.
We invested in a holding company of the largest telecom company in India, Airtel Limited, Bharti Telecom, which got delisted. And we didn't tender our shares with the enterprise value of close to around $25 million. And we waited for 17 years and saw the business move to a market cap of $20 billion.
I see a man now moving from all-in philosophy to one who's process-driven, who's looking at value, margin of safety. Is that what is happening to you?
I think so. As my evolution has happened, I've moved from financial independence to the wealth creation to a wealth compounding mode. And this has brought a tremendous change in the way I approach the portfolio construction and the process beneath it.
You run a retail advisory services. Tell me about that.
In the last few years, we've been advising a select few friends and families on an advisory basis, but now we have applied for portfolio management license, which we expect to get in a couple of weeks. Also, we have started advising an offshore fund out of Singapore.
You know, they say that you learn a lot more from your mistakes than your successes. And investing is quite humbling. We all make a lot of mistakes. What have been your mistakes and what have you learned from them?
Ramesh, it's a very appropriate question. We are sitting at a library which is partner library of the library of Russell Napier's library of mistake.com. So since the biblical era where we are used to seven sins of deadly sins of humanity, we have evolved to a whatever I say. There are three important psychological aspects of investment which I have tried to address, and they are greed, fear, and cowardice.
Greed and fear are the most obvious ones. The markets always swing between greed and fear. How do you avoid them then?
The strategy I have, which works for me, is foot in the door strategy, which allows me to take some profit off the table during the frothy market condition and forces me to invest the same capital in the following bust. And this allows you to average up or down the cycle without having a commitment bias of anchoring to a price or having a feeling of left out.
So that is your process now?
That's a process. Secondly, cowardice is another big aspect where people get frozen at the time of extreme dislocation. And the process is the firepower which gives you cash and the courage at the time of extreme dislocation, because the process forces you to take the money when the valuations are not in your favor and forces you to invest when the valuation is under favor. So you end up having both at the same time when you need them.
But have you actually experienced that through a bull market and bear market cycle? I mean, are these things easy to do? Buy when there's blood on the street?
I think so. The foot in the door, if you get it right, I think so. You may not be able to call the top or the bottom of the market, but you intuitively try to average up and average down, and that works well for the compounding and risk mitigation perspective.
You talked about mistakes in your life, fear, greed, coward. A lot of investing is also about learning from the gurus. Who have been some of the stronger influences with you?
Rameshji, due to technological revolution, I've been access to the work of eminent dead and people in offshore geographies, and also I've been lucky enough to get introduced to some of the doyens in investment in India, like Nimish Bhai and Vallabh Bhai of Anam, Manish Chokhani, Duryesh Bhai of corporate database, Joseph, and host of value investor ecosystem which has developed in last 2 decades, and I'm lucky to have their company.